The camper van you've been researching just quietly dropped $8,000. That's not good news or bad news. It depends entirely on whether you understand what's really happening. Because if you don't, you could still overpay by thousands, even in a falling market. Here's what nobody is telling you. The biggest reason prices are dropping right now isn't because vans got cheaper to build. It's because dealers are paying interest every single day those vans sit unsold on their lots. And that clock is ticking in your favor, but only if you know how to use it. I'm going to show you exactly why prices are falling, what the dealers will never volunteer, where this window closes, and how to walk away from your purchase knowing you didn't leave money on the table. Let's get into it. The numbers dealers aren't showing you. Here's the actual market data. Not opinion, not trend watching, hard numbers. As of May 2026, wholesale campervan shipments are down 14.4% year-to-date. Retail registrations, meaning actual buyer purchases, fell nearly 22% in March. The RV Industry Association has already cut its full-year forecast by 8.2%, and May marked the 7th consecutive month of year-over-year declines. 7 consecutive months. That is not a blip. That is a structural shift. And wait until you hear what dealers do after a van sits for 60 days. Dealers know these numbers. They track this data closely. But when you walk onto a lot, here's what you hear instead. You know, prices are holding pretty steady. Or, this is a popular model. We've had a lot of interest. Or the classic, I'm not sure how long we can hold this price. Here's what they're not telling you. Once a camper van crosses 90 days on a lot, it becomes a financial liability. Dealers use something called floorplan financing, essentially a loan they take out to stock their inventory. Every day that van doesn't sell, they're paying interest on it. It bleeds them quietly and consistently. And the moment you walk in as a serious buyer, you are the solution to their problem, not the other way around. That is the hidden clock. And right now, dealer lots across the US and Europe are full of vans with that clock running. Why this is happening? The real reasons. There are 4 forces converging right now. Each one on its own would move the market. Together, they're creating a window buyers haven't seen in years. Force 1. The 2027 models are already arriving. This is the one most buyers completely miss. The moment 2027 production officially begins, leftover 2026 models immediately become aging inventory, even if they're technically brand new and haven't been slept in once. That creates pricing pressure that dealers cannot escape. Think about what that means. You can walk onto a lot today, find a van that has never been driven more than a test loop, and the dealer knows. He knows that his 2027 units are already on a truck. His incentive to close with you is at its peak right now, not in September, right now. Force 2. Financing rates haven't dropped and buyers have walked. But there's one type of buyer getting the biggest discounts of all right now, and it's not who most people think. The Federal Reserve hasn't delivered the rate cuts the market was counting on. That's pushed a large chunk of buyers who plan to finance either sideways or out of the market entirely. The casual buyer has disappeared, and when the casual buyer disappears, the serious buyer, the one who walks in pre-approved, knows their numbers, and isn't emotionally attached to a specific rig, has the lot to themselves. That buyer is getting the best deals this market has seen in 3 years. Force 3. The COVID van life boom is fully unwound. During 2021 and 2022, camper vans were selling at markups above sticker. Some buyers paid $10,000 to $15,000 over MSRP because inventory was that tight. That era is completely over. Vans that were commanding those markups are now sitting idle, and the buyers who purchased at those pandemic peaks are now re-entering the market as sellers, pushing used prices down alongside new inventory simultaneously. Overpaying by $20,000 doesn't just hurt on the day you sign. That's years of campground fees, fuel, and trips you just handed to a dealer. The buyers who did that in 2021 are still feeling it. Force 4. Manufacturers are restructuring, and dealers need to clear lots. When an industry consolidates under financial pressure, the units on dealer floors get discounted faster, not slower, because the carrying cost becomes unbearable. Several manufacturers have already restructured their brand portfolios. Some brands that existed 2 years ago are gone. That pressure flows downstream to the dealer and ultimately to the price you're being quoted. The insight that will actually save you money. Here's the part most buyers never figure out, and it's the most practical thing in this video. The MSRP on a campervan is not a price. It's an anchor. It's a number designed to make whatever discount the dealer offers feel like a win for you. In 2026, buyers who understand the market are targeting 25 to 30% below sticker on new units. If the dealer says no, the correct move is to walk. There are plenty of other dealers with the exact same rig, and they're all feeling the same floor plan pressure. Now, that 25 to 30% is a benchmark, not a guarantee. It depends on how long the unit has been sitting, the specific model, and the dealer's own cost basis. But the principle is sound, and here's the tactical move that makes it real. Before you negotiate on price, find out how long that specific van has been on the lot. Most online listing platforms show the date the unit was posted. Track a unit. If it's been sitting for 60 days, the dealer is paying daily floor plan interest on it. That is your moment. Not when it arrived, not when it's fresh inventory. When it's been sitting 60 days and the dealer is watching that interest meter run. And here's something the dealer will never announce. Manufacturers sometimes have floor pricing agreements that prevent dealers from publicly advertising below a certain number. So instead of dropping the sticker, they'll offer several $1,000s in free add-ons, packages, or accessories. That's real money, but only if you're the one asking for it. Most buyers walk out without ever knowing it was available. Europe, same mechanics, different models. For European buyers, the dynamic is slightly different, but the core logic holds. European campervan markets, Germany, France, the UK, are dealing with their own version of buyer hesitation, driven by energy costs, post-pandemic fatigue, and economic uncertainty. The segment peaked around 2022-2023, and used values on units like the Volkswagen Grand California and Heimer Crosscamp have softened noticeably since. Here's the part most European buyers miss. The private used market is your opportunity zone right now. A 3-year-old van purchased at peak 2022 pricing is now competing against new 2026 stock at lower prices. Private sellers who bought high are stuck. They can't trade in at the value they expected, and they can't sell privately without taking a loss. That's your leverage. The mistake both European and US buyers make is identical. They walk in without knowing the comparable sold prices, and they let the seller frame the conversation. Don't allow that. Know the comp data before you make contact. Who should buy now and who should wait? Let me be direct, because this is where bad advice costs people real money. Buy now if you're a cash buyer, or you have pre-approved financing at a rate you've fully modeled. Cash buyers have the most leverage in this market. No financing contingency, no rate risk, clean close. Dealers respond to that. If you're a retiree or a couple with flexibility on timeline, you have an additional structural advantage. You can walk away from a deal and wait for the dealer to call you back. That patience is worth thousands of dollars, and most dealers know it. Wait if you're planning to finance and you haven't run the total cost of the loan. This is critical. Dealer financing sometimes buries real costs in the monthly payment structure. A van that looks affordable at $650 per month over 15 years may cost you $40,000 more than sticker when you total the interest. Run that number before you sit across from a finance manager. The market is favorable right now, but not favorable enough to absorb a bad financing structure on top of it. What to target? Lightly used 2022 to 2024 models from private sellers or smaller dealers who bought during the boom and need to exit. These are the vans that depreciated from the pandemic peak and are now priced closer to real market value. Low mileage units from the 2021 to 2023 production years are available at pricing that looks much closer to pre-pandemic levels, near new condition at a meaningfully lower cost. What to avoid? A brand new model that's been sitting on a lot for 6 to 8 months. It's been weather exposed, likely test driven multiple times, and is about to be 2 model years old in the market's eyes once 2027 inventory dominates. Either negotiate that unit down aggressively with full disclosure of the lot time, or find a private used unit instead. And avoid buying on urgency the dealer creates. "We have another buyer coming in Saturday" is one of the most reliably recycled lines in the industry. If that buyer closes the deal, there will be another van.
Walk away from at least one deal before you close the right one. That habit alone has saved buyers more than the 60-day rule has. The closing window, my honest take. Here's where I'll be straight with you because this matters. This window does not stay open indefinitely. The RV Industry Association, major manufacturers, and large dealer groups are all watching and waiting for rate relief from the Federal Reserve. The moment a meaningful rate cut arrives, and it will eventually, buyer confidence typically surges, inventory starts moving faster, discounts compress, dealers stop chasing deals and start holding the line. The market that's currently tilted toward you tilts back toward them. The data says July 2026 is a better time to buy than October 2026 is likely to be, and January 2027 could be a fundamentally different market than what you're looking at right now. That doesn't mean panic buying. If you're not ready, you're not ready. A bad deal in a buyer's market is still a bad deal. But if you've been sitting in research mode for the last 3 to 6 months and the only thing stopping you is waiting for a better moment, this is it. This is the moment you were waiting for. The market has moved to you. The buyers who come out of this market feeling confident are the ones who did 3 things. They walked in knowing the 60-day inventory rule, they negotiated on total price, not monthly payment, and they walked away from at least one deal before they closed a better one. The buyers who regret this market are the ones who let either artificial dealer urgency or their own emotional attachment to a specific van override the math. This is a buyer's market. Treat it like one. One question, and I want your honest answer in the comments. If you're actively shopping right now, what's actually stopping you from pulling the trigger? Price, financing, or picking the right van? Drop it below. I read every comment, and the most common answer becomes the next video.